Okay, you're here.
Welcome back to the Beat the Odds of Business and Wealth podcast, Trevor.
Hey,
good.
How you doing?
Pretty good. Good episode planned here today. So we're gonna get to the bottom of this tariff war here. So
all right, let's get into it. Yeah, because this is what's been on everybody's mind, and let's see what shakes out.
Okay, so I think rather than when in doubt, zoom out. I always say so. The news is gonna focus on the latest day announcement, and they're gonna look at things in silos. But I can try to put it together for everybody here.
All right, sounds good.
Here's the history of announcements. I'm gonna ignore Premier Ford, thinking that he is the King of Canada, and Danielle Smith, going down to Mar-a-Lago, I think she's gonna save the day. So let's just look at the history of announcements. Trump, Trudeau, Carney, full stop. Okay, right from the horse's mouth. So you look at January 20th, Inauguration Day. Trump announces 25% tariffs on Canada and Mexico starting February 1st, kicking off the presidency.
He came in hot, day one. All right, there's gonna be tariffs on Canada. There's gonna be tariffs on Mexico.
Billions and billions and billions.
Yes, all right.
Billions.
Okay. So what's next?
Then we get to February 1st. Trudeau announces 25% retaliatory tariffs on $155 billion of U.S. goods starting February 2nd. So he's locked and loaded, ready to go. Sounds like someone who wants to, this sounds like someone who wants to avoid these tariffs, right? But that's what we're saying. Okay.
Yeah, please no tariffs, but we're going to tariff you.
At this time, the S&P 500 index is about 6,000. Okay, keep this in mind. It's the S&P 500 index is about 6,000. February 3rd, Trump suspends the 25% tariffs on Canada until March 4th, 2025. There's really no official record of him pulling back the Mexican tariffs on that day. Mm-hmm. But, there's a difference between a tariff announcement and people actually collecting tariffs at the border. So, it's a logistical thing.
Right.
So I'm not, to ascertain who was actually paying tariffs at that time and who was not. It's one thing to announce it, as we found out during COVID. All the governments love to announce programs that there's no way to actually administer on the back end, right? But
yeah, one thing I had a question about. We'll maybe talk about it another day. But they're talking about the accessory dwelling unit deals on mortgages and all that. I don't even know if that happened.
I know it just disappeared into the background with the prorogue of government, right? So
okay, so what happened next? I know there was tariffs on, tariffs off, tariffs on, tariffs off, tariffs on, tariffs off. What happened next?
Trump suspends the 25% tariffs on Canada until March 4th. Okay, then February 10th, just to get everyone riled up some more. Let's put Trump announces 10% tariffs on China starting March 1st. Okay, now we start to get Monday, March 3rd, 2025, Trump confirms the 25% tariffs on March 4th. Okay, so he doubles down. We're going to confirm those 25% tariffs on Canada on March 4th. Okay. On March 4th, then, Trudeau confirms the 25% retaliatory tariffs on the $30 billion and of U.S. goods immediate, and the remaining $125 billion starting March 25th. So just remember the 25% tariffs on 155. So there were side-on items that came into effect right away. But again, did they actually come into effect right away? Were they logistically being withheld? Probably not at that point, right?
And let's not forget how, what's his name? Doug Ford, the premier of Ontario, talking about, we're going to cancel Starlink, and we're going to turn off electricity to the United States. We're going to pull all the U.S. liquor off the shelves. Brilliant strategy. And then I think it was just a few days ago, he went to the United States and basically kissed the ring and, we're going to work with the United States. He's such a tool.
I think the motivation will become clear as we go through this here. So, 25% retaliatory tariffs. So confirming the first $30 billion of the 155, and then suggesting the other 125 come into effect on March 25th. Okay. Then March 11th, Trump had a busy day on March 11, 2025. He threatens immediate 50% tariffs on Canadian steel and then reverses his position later in the day. So that was interesting. But just because, we didn't have enough chaos, he then announces 15% tariffs on EU goods starting later, upcoming, okay? So 15% tariffs on EU goods coming up, I believe April 1st is the deadline on that. Or he says April 1st or April 2nd because he doesn't want it to be April Fool's Day. So who knows?
No. We have something special in Canada on April Fool's Day. We get an increase in carbon tax, and then all of the MPs in Ottawa get raises.
Yes.
Yay.
But here is now, after knocking it down, they had the S&P 500 index at 6,000. Doubling down on the tariffs, you knock it down to 5,800, and then let's drag in the EU and threaten 50% tariffs on steel. Now they got it down to 5,600. The S&P 500 at 5,600. The business world hates uncertainty,
right?
More so than people think that there's one side of the political aisle is better than the other. It's like the thing they dislike more is uncertainty. They do not want uncertainty, okay? And just yesterday, Trump's announcing 20% tariffs on Indian goods. 20% tariffs on Indian goods. And so now, the stock market at, 6,000 down to 5,600. Okay, so at some point, I think they, went into correction territory, getting down 10% peak to trough, very close. So, down to 5,600, okay? Now, is that an accident? Are those things connected, right? That's the goal. It's like, what is the art of the deal here? It's like at this point, even if you wanted tariffs, the chaos in the announcements is intentional. Like there's no way to say that chaos in that announcements is not intentional. Even the Canadian announcements, it's like, they announced $155 billion, but was it really in effect? Did you really have to re-announce the $30 billion and $125? Like, what was it the first time? Just give everyone the certainty that they wanted, right? Like, actually just lay it out, put a white paper, put an announcement on the Department of Finance website, explicitly lay it out, what industries, what exclusions, actually put it down, right?
Well, and not only that, the people involved in those industries, they would kind of like to know as well.
They need to know. Like, can we come to work tomorrow?
Are we paying a tariff? Are we not paying a tariff?
What's the price?
What's happening here? Because, again, when we're talking about tariffs, okay, so the United States puts tariffs on Canadian goods. That means the United States is paying for extra for Canadian goods.
That's right.
The retaliatory ones are just gonna, kneecap our industries faster than industries leaving Canada and retooling in the U.S. So I think people need to understand that. That's one part of tariffs that people just don't get. I think retaliatory tariffs are kind of nonsensical, but I don't know what your take is.
I mean, for Canada to pick a fight with, an economy that's roughly 10 times the size, it's not really a trade battle that you can win, especially when we primarily sell goods that are wanted all around the world. We sell oil, gas, potash, high-grade uranium. Like, it's very easy to sell that to other countries, right? I mean, in the short term, you'd have some pain because, the trade routes and partnerships have been neglected. But, in the medium term, even it's actually not that difficult to sell those types of goods. So, but let's hear what Trump actually says about it here. So, I am going to pull this up here, Trevor, and we can look at the screen and get rolling.
He did.
Before you came into the Oval Office the first time, you were a very successful businessman, very successful real estate executive. And a lot of people said, oh, this is the business president. This is it. He's watching the stock market. He knows all about, he doesn't want the market to go down. And now we've got tariffs and the market has been going down.
Well, not much. I mean, in all fairness,
you said, look, we're going to have a disruption, but we're okay with that. Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that. You have to do what's right. What we're doing is we're building a tremendous foundation for the future, tremendous foundation. Everything's been taken away. We don't make ships anymore.
They're building a foundation.
Building a foundation for the future.
Let's get into that foundation.
All right. Okay.
Let's get into that foundation and what they're building. So, what are they getting out of it? Okay, here we go. Here's that foundation. It's the foundation based on $36 trillion of debt. That's where the foundation is built on. So we're talking about this wonderful foundation built on a pile of quicksand. But $36 trillion in debt, okay? And they're currently paying $1 trillion every year in interest. Okay, we have a problem. We have a problem because there's approximately $15 or $16 trillion coming up for maturity in the next year. What's the U.S. federal funds rate today? It's 4.5%. Okay, so the U.S. federal funds rate is 4.5%. You start rolling over $36.6 trillion in debt at 4.5%. You're looking at interest expenses of $1.6 trillion, not $1 trillion. Okay, so you add, another $600 billion here. All of a sudden, your deficit's not $2 trillion, it's $2.6 trillion. Okay, you're already at a point where you got a $30 trillion economy, and optimistically, you can only grow it by $1 trillion a year. So you're already behind. You're already behind $1 trillion a year, in the difference between your debt is going up by $2 trillion, and you can only grow the economy by $1 trillion. And now you're on the verge of it going to $1.6 trillion more than you can grow your economy. And they're putting the mirage up of Doge, that Doge is going to save $226 billion. It's like, maybe, yes, $226 billion over the next 100 years, yes. But if you keep noticing, this Doge keeps going up. But look at this deficit here; it's still $2 trillion. Doge was zero, and this was $2 trillion.
Yeah, $2 trillion. So basically, it's compound interest working against the world's largest economy.
That's right. They need a pullback in the market to justify those rates coming down. Okay, they don't want to roll over $16 trillion and eventually $36 trillion in debt at 4.5%. They want to roll it over at 2%. Okay, that is the goal here, to roll it over at a cheaper rate, and that's what he has to do. That is the only reasonable explanation for the chaos at this point. Because even if you wanted tariffs, you could do it with more certainty that the business community could plan. But that could be done in the announcements. This is an erratic set of announcements when you just go in the back and forth and the pulling, and it's back on, and I'm going to double them, and then reverse course the same day. It's just like, that is the goal. That is the end game, is the chaos, because you need the chaos to create the pullback in the market, because they can't afford 4.5%. That's just it, right? And now you have a dance partner on the Canadian side. What do they need? They need an excuse to print some money to buy some votes. Okay, comparatively speaking, the Canadian balance sheet is actually better. So most people don't know this, and I'm not suggesting that it's well run or anything like that. But comparatively speaking, our debt to GDP is actually it's actually lower. Okay, when you look at the CPP, or as I like to call it, the Canadian Pension Ponzi Plan, it is a Ponzi, but it's a more well-capitalized Ponzi than U.S. Social Security. So they actually have so when you start looking at that obligation and you look at net debt, Canada's in a better position. So they want to print money to buy some votes, okay? So here's where we are right now, and cover your eyes, Trevor. It's going to come up. I'm sorry to show you this, but here we go. Here's Poly Market. Which party wins the most seats in the Canadian election? This is not the CBC poll. This is Poly Market. Liberal Party has now pulled ahead of the Conservative Party. And so you go back, back in January, there was a 94% chance that the Conservatives were going to win the most seats in the next election. And now fast forward to today, all of a sudden you have The Liberal Party, there's a 55% chance that the Liberal Party is going to win the most seats, and the Conservative Party, now we're at 45. And so you got some chaos. You got the boogeyman to fight. You got the globalist banker taking over, and he's in charge now, and you got an excuse to print some money. Both sides are getting exactly what they need out of the tariff chaos. And I would suggest that neither party in the short term has any reason to solve this issue. It's this is being presented, and we're trying to solve an issue. It's like the chaos is the destination. It's like the chaos is the point of the whole thing. And so two parties who are supposedly negotiating with each other, and we're watching CBC and Fox News, and they're telling people about the strategy behind the negotiation. It's like the strategy behind the negotiation is to create the chaos to get what you want, which has nothing to do with the tariffs. And that's where we're watching. It's incredible. You're watching two sides negotiate when neither party actually wants a deal.
That's crazy.
Yeah, it is pretty crazy. And so what does that mean for the average Canadian? It's like you're going to have chaos in the markets. Okay, so these asset prices are risky. Ultimately, grinding up and to the right is a certainty because they got to print more money. So that's because they have no intention of balancing the budget. Doesn't matter, Liberal government, conservative government, Republicans, Democrats. They're not balancing the budget. Like that's not on the table here. So they're going to print money, but they're willing to live with the chaos in the short term because think about it from Trump's perspective. It's like no one's really going to care about what the stock market was in his first year of the term. They're going to care about what the stock market was in the fourth year of the term. Mm-hmm. But if he has to deal with $1.6 trillion in interest expense year after year, as opposed to $800 billion, it's like, well, that's like having one hand tied behind your back for the remainder of those 4 years. So just tank it in the first year and get the interest rate that you want, and then proceed forward. And the Canadian government, they need the boogeyman, they need the excuse to print the money, and they're getting it, and they're getting it. So I see no expectation that this is going to resolve in the short term until we get an election. The Canadians, the Liberal government wants that election, and Trump wants lower interest rates. And until we see that, what's the likelihood that this tariff issue is going to get solved? I think it's low. That's my probability. So you got to be prepared for that volatility, but volatility can be good as an investor too. As an investor, if you have money in the stock market and you're thinking about going to pull it out in November because you're buying a house, like that's kind of risky right now. There's going to be a lot of volatility in the market, but over time, if you're dollar cost averaging, it's like you'll actually get some stocks on sale. Okay. And it's a bit of a risky game too. So, it's always, having those positions in alternative assets like Bitcoin and gold provides a real diversification there. So, it's going to be an interesting year. It's not going to be a straight line path. It's a risky game too. So they could create a bigger pullback, right? Because it's a high wire act trying to do this, right? Eventually, business community and investors, they get upset, and one investor pulls out, and the next investor pulls out, and all of a sudden you have the cascading funds leaving the market, and it can roll in a hurry, right? But they have their tools at their disposal. Nothing that they're going to do here is going to be as serious as locking everybody in their houses for 2 years. So the monetary tools that they have at their disposal will fix it, right? A 25% tariff or even a 50% tariff, like it's not as mathematically equivalent to locking everybody in the houses and shutting down the production in total. And we already know that the monetary tools at their disposal can, I don't know if I want to say fix it, like that's not the right, it's not the right word, fix it, but it's just push the problem into the future, right? So they can smooth out the effects and push the problem into the future with that issue.
Yeah. Well, one glaring thing that people aren't looking at, everyone's looking at Trump because, everyone loves to hate Trump, but China just imposed a bunch of tariffs on Canada, 100% tariff on canola. pork, other things. What's their plan? They just trying to get at Canada because of the EV ban that they put on, or tariff that Trudeau put on EVs, and how does that affect our market, if anything, or is it mainly just the boogeyman of the U.S. and Trump?
Yeah, I mean, as strange as this might sound, is that tariff was more targeted and realistic. You know what I mean? Like if you have a tariff on canola, you actually know what it is. When you put like just a blanket tariff, it's people forget about, especially in two closely connected economies where goods move back and forth across the border multiple times. Like you can get some really strange results, right? And you end up, building a Chevrolet Suburban, and it's going to cost $300,000, and everyone could just buy a G-Wagon from Germany instead. Like you can get some really strange things. Like tariffs have to be, a little bit thought out, and we have a ban on. We have a tariff on EVs, and, they put a tariff on canola. It's a little more measured, right? Whether it's right or wrong, it's kind of a little more measured. And do I understand? It's like, yeah, okay, we put a tariff on their EVs, and they put a tariff on canola. It's like, what did you expect? What did we expect by putting that tariff on them, right? So,
well, I know that the mortgage rates in Canada have been going down and down and down. I've been looking at a lot of the lenders lately, and they've got really great deals on 5 years on refis. Like they're pretty confident. I saw this morning one of the lenders 3.94 on a 5-year fixed.
Yeah.
Like really good, and still paying decent commissions on that. Like what's the plan here? Like I know I think you came in and told me that the Fed, I mean, they reduced the interest rate just the other day.
Fed held.
Yeah.
Yeah, they held.
Oh, they held.
They held.
Okay.
Yep. They held, but they did project two cuts for the remainder of the year. That was their expectation. So they held, and they projected 2 cuts. So
there's probably going to be more cuts in Canada, but I mean, like, how is that affecting us? Because I was looking the other day at the TSX, comparing it to the S&P and so forth, and it looked like the TSX was actually kind of holding okay. I don't know what it is today, but have you been keeping an eye on the TSX and comparing with the S&P?
Yeah, I mean, on a day-to-day basis, I think the S&P 500 has been really frothy and overvalued for a while, but it's just like it's a crazy time where you're just trying to understand what's worse, holding the currency that is going to go down, or buying NVIDIA stocks at 60 times earnings. So what's the lesser of two evils, right? And the outlet has been, for the big serious money, has been the gold market, because that chart has been breathtaking. When you zoom out on the gold market chart, it's scary. The increase in gold prices, which should be the insurance assets. So ultimately in Canada, it's like it's gonna relate a bunch around the Canada 5-year bond yield in terms of like fixed rate mortgages anyway. So the variable rate mortgages will be tied more to the Bank of Canada rate and the prime rate, but in terms of historically projecting mortgage rates in Canada, 2 points. You look at the 5-year bond yield, and it's going to be governed by that. So coming down, but not in the last little while. I mean, here it is. It's not. Can we get to 2% from here? Can this 5-year bond yield get to 2%? Right? Because what's the stress test now that it's 5.25, right? Is the stress test. So it's 2 points over your contract rate. So you get kind of maximum velocity when people start getting 3.25, like that. Then you kind of get maximum velocity in terms of what people can actually purchase, because now it doesn't matter if it drops further, they're going to be stress tested on the same number. So, is it going to keep coming down? I think so. I mean, I said going back to last year that 2.5% was the neutral rate historically for the Bank of Canada rate, and I thought we're going to 2.25. And I think at this point, even RBC agrees with me at this point. So they'll keep dropping. They'll keep dropping in terms of in terms of mortgage rates. Our economy has not been that robust when you look at the job market and you look at the composition between the public jobs and the private jobs. It's just not, and wage growth. It's just like, it's nothing to speak of, really. It's just, slightly over even, propped up largely by immigration and public jobs. Like that's kind of the story of it. So, U.S. is projecting, the Fed funds rate dropping at least a half a point. I don't think Trump is going to be happy with a half a point. He wants more, right? He wants more. Is he going to get it? I think he's going to get it. I think he's going to get it one way or another. He's going to find a way to get that rate down, and that gives more permission for the Bank of Canada to go even lower.
Crazy. Yep. All right.
So I guess that's what we have for everyone today. So, if you haven't got your tickets to the boot camp for May 10th, grab your tickets. So there's still a few available, but I think there's less than, I think there's only about 20 tickets left at this point. So get your tickets for the May 10th boot camp. And next week, Trevor, you'll be in the office, right? But I will be in Disneyland. And so unlike some other YouTube channels where it's, how to do Disneyland on a budget, I'm sure my girls are going to find a way to how to spend as much money as possible in Disneyland. I think that's their goal. So I should make an entirely different video, but that's the goal. But we'll be there, and we'll be talking about, I think we might talk about some Canadian brands or whatever crazy curveball gets thrown at us between now and then, right? So
all right. Yeah. Every week is a new adventure in Trump land in Canada. So looking forward to talking with you from Disneyland, and it's going to be an exciting podcast. I'm looking forward to it.
Sounds good.
All right. Let's have a good day.